Did you know there are different types of mortgage lenders, and the type that you choose can impact your experience just as much as the rate that you get? I'm not here to say that any one type of lender is universally better than the other. The most important thing is working with somebody you trust, someone who takes the time to explain your options, answer your questions, and make sure that you actually understand the mortgage you're applying for. That said, understanding the differences between the lender types can help you make a more informed decision. Broadly speaking, there are three main categories of mortgage lenders: retail lenders, correspondent lenders, and mortgage brokers. Each operates differently with its own advantages and trade-offs. Retail lenders include traditional banks and credit unions, direct lenders that are not traditional banks, and online lenders. A common assumption is my bank knows me, so they'll give me a better deal. But that's simply not how mortgage lending works. Having a checking account or a long-standing banking relationship does not bypass credit income or debt requirements. Traditional banks often have a more limited product offering, can have slower turn times, and communication may be less flexible and frequent. Direct retail lenders are typically larger mortgage companies that operate beyond standard banking hours, and often offer faster processing and more transparency. Online lenders can appear cheaper on the surface, are usually call center driven, and may lack personalization or proactive communication. Some borrowers have great experiences with online lenders, others don't. Just remember, lower costs often come with trade-offs in service and support. Correspondent lenders are a hybrid between retail lenders and brokers. They fund loans in their own name, use a warehouse line of credit often backed by a wholesale mortgage lender, and may also broker loans to other wholesale lenders when it makes sense. The advantage of correspondent lending is control over the process and, in many cases, faster closings. The potential downside is pricing transparency. Correspondent lenders can earn additional compensation through yield spread premium. For example, a rate may generate 2.5% in commission. The lender may only need 2% to be paid. The extra 0.5% could be credited back to the borrower or kept by the lender. This doesn't mean correspondent lenders are doing anything illegal, and many operate ethically. But unless you know what questions to ask, this structure can be less transparent. Mortgage brokers partner with multiple wholesale mortgage lenders, banks, and credit unions. Unlike correspondent lenders, brokers must set a fixed compensation level with each lender, disclose that compensation up front, and show it on final closing documents. Most ethical brokers set the same compensation amount across all of their lenders. That means if their compensation is set at 2% and a rate generates 2.5% in premium, the extra 0.5% must be returned to the borrower as a credit towards closing costs. Brokers cannot increase their compensation above what's disclosed, which makes this model one of the most transparent for consumers. Additional advantages for brokers include the ability to shop multiple lenders for pricing and guidelines, greater flexibility for complex scenarios, and often faster turn times and lower costs. Here's something most borrowers don't realize. Across retail lenders, correspondent lenders, and brokers, rates are usually pretty similar. The bigger differences tend to be transparency, communication, turn times, and flexibility in underwriting. Regardless of the lender type, here's what truly matters. Number one, transparency. You understand the rate, costs, and structure. Number two, communication. You get timely, clear updates and accessibility. Number three, education. Your questions and concerns are answered thoroughly. And number four, comfort level. You trust the person handling one of the biggest financial decisions of your life. Those factors will impact your experience more than chasing the lowest advertised rate. No single lender type is perfect for everyone. The best choice depends on your situation, priorities, and how much guidance you want throughout the process. If you found this video helpful, please consider subscribing and checking us out on other social media platforms for more straightforward mortgage educational content. Thanks for watching.